So a financial market is a place that provides the ability to exchange different financial assets. When we say different financial asset, to exchange your money for ownership. And in a stock market, for example, when you buy a stock, you become part owner, you buy a little piece of the company. So what allow you to do that is the financial market. It's an organized place. Some control, if it is central one, we'll see that it's controlled by a government, by an organization that give everyone an ability to exchange your money for a financial asset. Hopefully, this financial asset, this you buy from the market will have the value to it. We when we go a little bit more, when we look at a market itself, a market is a place where people meet to exchange things. When we say things or product, it can be a product or service or an asset. When you go to the supermarket to buy bread, for example, you go to you say supermarket. This market is a place where you exchange money. You bring money to the market, and then in exchange, you give the money, and then you get bread in return. The same thing in the financial market. It's the marketplace where you exchange your money for an ownership or a stake in a company or an asset. Hopefully, this asset will give you a return. That's what a financial asset is. Okay. Exchange. When we say exchange, we said you have to give up one thing to get another. That's an exchange. And the market, you do an exchange. So when you go to the marketplace to buy bread, you give up money and then you receive bread. Right? You give up one thing to get another thing. That's an exchange. The exchange has been happening since the beginning of time. Right? Even before Jesus Christ came on earth, that's a reference. We had to do exchange. We have to go to a marketplace to exchange cow for milk. Right? You exchange potato for sweet potato, right? That's exchange. You give up something to get another one. So that's what we do in the financial market as well. Financial asset. So now in the financial market, you exchange financial asset. What is a financial asset? A financial asset is anything that produces money, or anything that can pay you a return. Okay, that's a financial asset. A stock is a financial asset. Okay, and Forex, when you buy a currency pair, is a financial asset. In crypto, when you buy Dogecoin is a financial asset. Okay, so that's clear, hopefully, to everyone. So when you go to when we say crypto market, cryptocurrency market, so you go to the market, you exchange money to get possession of a crypto money. Okay, it's a crypto. Then your money is attached to the crypto now. The value of the crypto increase or decrease. So you can either receive a return, right, if it's improved, or you can lose part of your money if the asset depreciated, right? Depreciation is when the asset lose value. Appreciation is when an asset gain value. Okay, this financial asset is anything that can produce a return, that can produce money. Example of financial market: the stock market, the Forex market, crypto market, real estate market, all these are example of financial market. Okay, what you can do in a financial market, you can buy and sell asset. Okay, we know what an asset mean. Now we know, for example, foreign currencies, bond, stocks, commodities. They are things you can buy and sell in exchange for money. Okay, so whoever's in the market selling that, now we will see when we talk about the broker will allow you to buy the asset without you going to a physical place to buy it. Okay, so we'll see that soon. Buy and sell asset such as foreign currency, stock, bond, commodities in exchange for your money. You have to pay for it. That's what that is. A capital market. Okay, now this is the capital market is one of the main part of the financial market. Investors can gain a return on their investment, ROI, or company can raise money in a capital market. When you're talking about in the financial market, when you're talking about capital, you're talking about money. Okay, we're not talking about the capital of a country. We're talking about capital in a capital market. This is where you buy and sell, and that's why you can let people use your money for a return. The capital market, if you have money, you for example, if you have $1,000, you let somebody borrow your $1,000 for an interest. That's part of an exchange. This exchange is part of a capital market. When you go to the bank to borrow money, you become part of the capital market, right? So if you have a lot of money, I am an investor, I need money to buy a piece of property. Now I'm going to go to the capital market to get the money. I can find the property, but I don't have enough money to buy the property. So now I go to the capital market, most likely a bank, right? The bank lets you borrow the money and then you pay the money back on interest in 30 years, for example, as a mortgage. Okay. In the stock market, the capital side of the stock market is where company come to raise money. Investor has money, the company need money. What does the companies do? The company sells stake in the company, we call them stock, share, and then you buy the share and the company receive money. You see, that's what we call a capital market. So businesses receive fund, which is we call it money. An investor receive ownership in the business. If you're a business owner, you're gonna open a business, you don't have enough money, you borrow money from the Small Business Administration, from the government, from family members. You know, you then all you do that, you are in the capital market, right? You got the business, you got a restaurant you open, you don't have enough money. I have enough money, I'm an investor. I let you use my money for a return, you pay me money back. All right, so two types of market. Last time we talked a little bit about it. There is two types of market: centralized market and a decentralized market. So in a centralized market, okay, we call it centralized exchange. A market sometimes called is an exchange. Don't confuse the two. It's the same thing. A centralized market or a centralized exchange is being characterized by the settlement of a transaction between the buyer and the seller by central power. There is a middleman, there is an organization in the middle that make the transaction between buyers and sellers possible. Okay, so the same way when you go to the stock to the grocery store we call it a market as well, right? So in that market is a centralized market. This is where you go to buy everything you need. Somebody, like if you go to Walmart, Walmart is a centralized exchange. Why? Because people come sell the product to Walmart, they put it in the shelf, you come to Walmart with money, and Walmart charge a fee for people to sell at their stores, and when you buy, Walmart make a profit in the middle. Walmart also is a middleman. Okay, Walmart is a centralized market, for example. This is what, hopefully that's clear to everyone. If you have a question, remember you can raise your hands at any time. Okay, so it is the central place where the price is determined. Settlement of trade is called the clearinghouse. This is in a centralized market. There is this is where all the settlement of the trades happening. Okay, and the organization is called the clearing, or we call it the clearinghouse. So banks, for example, is a capital market, but there is a central organization that taking care of it is the bank. Okay, all trade is happening in the stock exchange, for example, the New York Stock Exchange. The New York Stock Exchange is the middleman that allow trade to happening. They have to clear. When you say buy a stock, for example, you go to Robinhood as a broker, you buy stock on Robinhood. Your order got to go to the stock exchange to find somebody who's on that stock you want to buy, and then they connect the seller of the stock with you, the buyer, and in that they do there's a swap fee you pay, and to make that happen. Okay, so this is centralized market. Okay, it's a centralized. This is the place. Price is determined by these people, right? By the central authority, by the organization. Okay, so here's what the centralized market looks like. A centralized exchange. You can see we have buyers on one side, we have sellers on one side. Buyers doesn't know the seller. Okay, so it's not like when you go to if you're from Haiti, when you go to the marketplace, you find a seller, you buy something, you still go to the marketplace, and that marketplace is not centralized because there's no one organization who set price in there. So you go directly to the seller to buy it, you negotiate with them, you give them a price, they agree. In the centralized market, you don't when you go to buy a stock, you don't negotiate the price. The price is already set. When you go to the grocery store, you don't negotiate the price of bread. The price is already set. All you have to do is pay for it, right? So this is what's happening in the stock exchange as well. Now, the regular stock exchange, the master of the universe, one price and control the spread. So the market control the spread, how much you pay for the stock from the beginning. As the price of the stock goes up, the central place, if too many people are buying, the central organization can stop trading on the stock. Sometimes Bitcoin might be going up, right? For people who buy Dogecoin, it's going up so fast. Now you're trying to put an order to buy, your broker will not let you buy. Why do you think so? Because the authorities, the centralized market, the authority who control the prices, they say no to all the brokers. They stop trading. Once sometime there's a stock that might be going. Remember one time the one of the main stocks, I can't remember the name of it, but GameStop. Remember GameStop? GameStop from $10 go to like almost $200 in like couple of days. When other people's trying to get in Robinhood stopped trading. Nobody can buy it, right? The central authority tell Robinhood, stop all your trade because we suspend trading in that asset. Okay, so that is financial. So if you once you what you're learning here, it's important because it applies to every market. Stock, name it, it's applied. Okay, so let's look at the second type of market, decentralized market. Decentralized market or exchange is the process of distributing the decision-making power to no central authority. Where centralized, there is a central authority that control price, that control spread, that control what's available in how you trade. In a decentralized market, the process is the other way around. There is no central power to make decision, right? So it's important to understand that in a decentralized exchange allows its client to have control over their own resources. Okay, you have control over your own what you do. Okay, so right now, if you want to go buy crypto, you can buy as many or as little you want. Okay, there's no control to that. Okay, the decentralized exchange does not have a central server that could become target of cyber attack. That's important. In a centralized market, if people can attack the computer system of the organization and shut down trading. In a decentralized market, the servers are located everywhere. Even if you destroy one server, all the other servers around the world still will be functioning. Okay, so not controlled by an individual or a narrow group of people. You don't have that in a decentralized. Respect the privacy of its client, does not require lengthy form of registration or fulfillment. This is a decentralized market. This is what a decentralized market looks like. As you can see, we have Bank 1, Bank 2, we have EBS, we have Bank 3, we have my name, you have Warren Buffett, you have market maker. Even if one of them is down, right? Let's say Bank 2 is down. What do you think gonna happen? The market will continue to exist because all this is a chain of server that's run the whole thing. Okay, so it's the same way when you have a cell, right? You have a cell you have a house, for example, that has many rooms. If one room has an issue, you can close that room, the house still usable. But if you have a house with one room, if that one room is not available, then the whole house is not available. The house with one room is a centralized market. The house with many rooms is a decentralized market, for example. All right, question on this. Remember, if you have a question, always raise your hands, okay? All right, world biggest decentralized exchange. New York Stock Exchange in the United States, based in New York, is the largest exchange in the world as measured by the market value of securities traded. This is the biggest centralized exchange. Okay, biggest centralized. That's clear. The New York Stock Exchange. This is where you trade securities, right? So like stock, like bonds and all this good stuff. Okay, NASDAQ, National Association of Security Dealer Automated Quotation. That's what NASDAQ means. Okay, that's in the US. That's a big one too. It's a centralized market. Euronet, European New Exchange Technology in Europe, is a centralized market. Okay, Frankfurt Paper, this is in Germany. Okay, Frankfurt Stock Exchange is a centralized market. Why? Because Germany has control of the market. They tell you what to do. They can shut it down. Okay. So London Stock Exchange, LSE, United Kingdom, those are centralized exchange. When people are talking about these things, now you should know what they're talking about. This is why we're doing that introduction. Tokyo Stock Exchange, TSE, is in Japan. Those are the biggest stock exchange, centralized exchanges in the world, guys. Remember those. If you trade option, if you trade stock, if you trade futures, if you trade all these other financial instrument or asset, those might be, one of them might be from one of these markets. Okay, so if you in France right now, you following this class, there is a stock exchange in France. I don't know what it's called, but you would know if you live in France. If there's one in Canada, you would know you live in Canada. So your research should be: do we have a central exchange in Canada? If you live in Canada, that's your time to find out. Okay. Forex is a decentralized market. This is where we're going to focus on Forex, right? It's a decentralized market. The currency market is the largest and the most liquid financial market in the world. Trading is allowed 25 hours a day, 5 days a week. Somebody already told us that. Thanks to the boom in online trading, it's available to everyone, everywhere. Almost everyone, as long as you have an internet connection. Okay, you have a smartphone. Wow, you can plug in and do it. Thanks. We have to think in the internet, right? Thank you. The average daily trading volume is around $7.5 trillion. This is from Biz.com, source on 2022. Okay, there is no specific trading floor, such as New York Stock Exchange, for trading stock. In New York Stock Exchange, you can go to the trading floor every morning. If you watch TV, don't you hear they ring the bell, they open the market? Does everybody never experience that?
Yes.
Yes. And then at like 5 p.m., at 4 p.m., they ring the bell to close the market again. That's a centralized market. They have a floor where you can go, you can visit the stock exchange sometimes, right? So, but in the currency market, there is no floor you can visit. You can't go and say, let me go visit the Forex exchange. There is no floor for it, okay? It's all online to all of you, okay? Forex therefore work on the basis of the connection between dealers and traders. So dealers and traders over the internet, they have they make it available. Do you know 10 years ago or less or more, you and I could not even trade Forex. We couldn't do this. We could buy stock. The way we would do it, we would pay somebody to buy stock for us. Now with the internet, Robinhood, right, apps, you can get an account, you can buy stock anywhere. The same way you could not trade. Trading was for the rich people. We tell traders we could not have access to the market. You see a market, how big this market is, we didn't have access to it. Somebody say something?
They're asking on.
Oh, so that's it. Father,
Eso kameto Beloni, o kameto su silence pour nous, s'il vous plaît. Please put you on silent. We can hear you and see you. So thank you. Okay, so this is what you have access to right now. All right. So what instrument can we trade in financial market? We can trade stocks, in financial market, currency pairs, this is where we'll be focusing in Forex. Okay, we can trade currency pairs. We can trade stock indices, index we call them. For example, NASDAQ is an index. S&P 500. Do you hear those indexes, right? Dow Jones Industrial Average. You hear those, right? Those are indexes we can trade in the market. Okay, in the financial market. Commodities. When we say commodities, does anybody know what commodities mean?
I think it was just when you sell gold,
Gold, yeah.
and silver.
Yeah. Mm-hmm. Yeah. Right. Okay. So yeah, that's commodities: gold, silver, corn. Okay. Precious metal. Those are all commodities. Okay. Cryptocurrencies. In financial market, we can trade stock, we can trade currency, we can trade index, we can trade commodities, we can trade cryptocurrency, whatever it is. What you're learning here also apply to all this market. Okay, but we're gonna focus. We can't study all this market at once. Okay, we focus on currency, and then once you get that, you learn. We can do another one on stock. We can do crypto. We can do another 7 classes on stock, 7 classes on crypto. But once you learn this, you'll be able to understand what are stocks, right? So quickly, a stock is a security that the owner become a shareholder of the company. The shareholder has different rights. You're going quickly on these because we're not doing stock. Stock participate in the management of the company by voting for it. If you own the stock, you participate in the liquidity of the company if anything happened to the company. And what are stock traded? Why? This is a company raise money by selling shares on the stock exchange. We're talking about that. Investors is motivated by receiving a return on their investment by buying stocks in the by buying share of the company or ownership as a way when the company has become big. For example, Nvidia now is almost 200. So Nvidia at some point were $3 to $5, $6. So if you were in the market, you had that skills we are learning here. You could have reviewed saying, hey, and this company will be big. I'm going to buy it now and I'm going to leave it there. Right? So you buy it at $10 and you don't do anything for 5 years. Now it's at $180. Right? This is important. So you receive the stock in the company. Now the stock gain value. You receive a return when you sell your stock. Okay, investors evaluate companies' resources, companies' liabilities and asset and debt to see if the company is valuable. If the company is valuable, it's a no-brainer to understand, hey, it's a good stock to buy once you understand what company is all about. Okay, so currency pair are traded on the foreign exchange known as Forex. Now we are back to what we're talking about. Currency pairs in the financial market is traded on a foreign exchange. That foreign exchange is known as Forex. It's a foreign exchange market. Remember that? So it's clear. A currency pair consists of 2 currencies, where one currency is called the base currency and the other is the quote currency. So we have CAD, JPY, for example. CAD, does anybody know what CAD means?
Yeah, it's like the dollar of Canadian.
Canadian dollar. Yes, sir. Okay. Does anybody know what JPY means?
That's Japanese yen.
Japanese yen. Okay. So A currency pair consists of two currencies. Every time you buy or pair or sell money in the currency market, it got to be by pairs. Okay? And the pairs, we have two things we have to understand. You need to remember this as a currency, as a forex trader. A currency pair has the first currency is the base currency. And the second one is the core currency. Is that clear?
Yeah.
Yes. Good. We trade currencies in such a way that we speculate on the strength of one currency against the other one. Okay, we'll learn more on this because it's a pair. We speculate on what the value, what the strength of the Canadian dollar versus the Japanese yen. We call it an exchange rate. Okay, so this is clear. And currency pairs are characterized by a high liquidity and often volatility too, depend on the fundamentals. You will learn about the fundamentals. You will learn about liquidity. You will learn about volatility. High liquidity means how the money is called major currency pair, minor currency pair, and exotics currency pair. 3. Minors or crosses, they call them sometimes. If somebody say, I'm trading a cross pair right now. Now you know what they mean, right? It's a minor. You'll understand that a little bit when you go in details on each one. Okay, and exotic pairs, you will understand what exotics mean. Exotics mean is not, if you go to a bachelor party and you hire exotic dancers. That's not what we're talking about, right? Okay, so this is money we're talking about here. Okay, so clear. Okay, so stock index. Okay, this is a general introduction I'm giving you to the financial market, so you get it. But we will, after this introduction, we'll stay put on Forex, okay? Stock indices, which we call an index, or stock index, is the sum of many different instruments traded on one exchange. Index, right? So one index you hear about, right, is the Nasdaq, right? Nasdaq 100. André, c'est spécialiste lié. He's a specialist in Nasdaq. Okay.
Yeah, right.
Andre is a specialist in trading Nasdaq. That's all he trades. That's all he does. He's a specialist. So if you want help on that, call Andre, guys. Okay. So
What about you? What do you trade?
I'll tell you later. Okay. The Nasdaq 100 is one. It's the sum of 100 biggest technology stock in the U.S. market. Right? Together they trade as one. Okay? That's what we call a stock index. Does anybody have a question on this?
It's a sum.
Okay, the stock index is an indicator of the development of a given sector or economy of the country as a whole. So if you do if you pay attention to what's the 500 one?
S&P?
S&P 500. So the S&P 500, guys, is a representative of the U.S. economy. Okay, it's represent the economy of the country as a whole. Is an indicator. If the S&P 500 is up and down, if it's going down, that's an indicator the economy in the US, something is happening to it. Okay? So, or some sectors in the economy have index, right? So we're not doing stock, so I don't need to go through all example here. Okay, example of stock indices, Dow Jones Industrial Average, we call it US 30. That's the one I trade. Okay, S&P 500. Some other people, that's all they trade, S&P 500. NASDAQ 100, NAS 100 is what Andre trade, is an example of index, okay? The value of stock indices varies based on the movement of all shares that are contained in that index. For example, if you take US 30 means there is the 10 biggest companies in the US.
The 30.
Is the biggest 30 company of the US are part of the Dow Jones Industrial Average. So in order for you to understand the value of that stock, you have to look at the movement of all 30 stocks in the index. If you're trading a US 30, you need to pay attention to those 30 stocks. That's all that means. Okay? The value of the index varies based on the movement of all the share that's part of that index. Okay? And let's get commodities. Commodities are goods traded in the market without quality differences. Okay.
Can I ask something, please?
Yes, sir.
Why, when it's down US 30, the measure of like GPUSD, AUD, USD, GPY down, bad? Why?
Okay. So, good question. I like this guy already.
This guy.
Yeah. So we will answer that for you later.
It's okay, man. Thank you, sir.
But one thing you have to understand how does the US 30 affect a currency pair. This is why you're in this class. You will learn it.
Okay, thank you.
There's
Yeah.
correlation.
Yeah, there is what we call correlation. This is what we call divergence. We'll cover all that for you. There's a positive correlation, there's negative correlation. So what you will learn to do is US 30 has a positive correlation with a currency pair, or does it have a negative correlation? That's mean if you have a positive correlation, if US 30 is going up, that pair also is going up. That's a positive
Okay,
correlation.
I got it now. Thank you.
If they have a negative correlation, when US 30 is going up, that currency pair will go down.
Yes.
So if you are a trader, now what do? You pay attention to US 30. Now you know the correlation between the two, then you know what trade to take. So commodity cannot be a car that is produced by many different means and at different prices. The most well-known traded commodities are crude oil, you hear that, gold, natural gas, coffee, corn, gold, and all that. This is what we have to understand, okay? So this is what you will learn as well. Once you know the economy of the country, for example, Canada is big on commodity, oil, gold, and stuff. So when price of gold or crude oil or price are changing, you need to pay attention to any pair that have the Canadian, that has the Canadian dollar associated with it. So, okay, commodity prices depend on climate change, global resources outage, trade wars, and etc. Okay, understand but this is important to understand that. Okay, it is important to understand that this commodity are correlated to certain currency at a particular economy. This is what I just said right earlier. Right, the economy, when it's based on the natural resources, anything that happens to that natural resources or commodity gonna affect the price of the money of the country. And then if you're trading that money, you better understand that. Then you will lose your share. Okay, correlation of prices development between currency pair and commodity. Crude oil, Canada. Economy is based on crude oil. Gold, iron, Australia. New Zealand, dairy product. Natural gas, Qatar. You have to understand these things. Cryptocurrency are type of digital currency. In other words, electronic money. The biggest problem for some can be the advantage is that economic money is not regulated. That's the biggest problem for a lot of people. It can be an advantage, but some people don't like that. It's not regulated. You can lose. The most famous is the Bitcoin. We know it. Dogecoin, Ethereum, Litecoin, Ripple. These are famous currency, cryptocurrency.